So this US 30 analysis for Monday the 19th of March. Now, let's have a look what happened pricing, where pricing may likely go. So as we can see here on the US 30, we've posted a series of lower highs. We then had prices trade slightly below this 24,700. Didn't quite get down towards the 24,000, 24,650. So we've posted a low, a higher low. Had prices come back up towards the 24,864. Brief pullback before seeing this upside continuation, breaking above the 25,000. Now from 25,000, we weren't able to break and hold above it for a period of time. We did see sell-side momentum return to retest these lows. Now, these lows are proving themselves important, so we will mark them out on the charts. We'll mark them out on the charts here. So we'll see where our lows were. We've got 60, so it's around about the 24,800. It's around that 24,800 level. So we'll mark it out in charts. May prove itself important in the future for reference purposes. So it's in around that 24,000 mark, 24,800. We've previously found support, and we've come back down towards that level. So we traded through it. Didn't quite get up towards that 25,101. Got pretty close. Not quite there. We weren't able to hold above the 25,000. We saw the sell side momentum take us back down towards that 24,800, where we previously found support. Some minor resistance in around 24,800. From there, we've had a move upwards, posted a high low above at the 864, using the 864 as support. So from 800 to 864 as support, used as a springboard for the next leg up and a move towards that 25,000. From 25,000, we traded slightly above 25,000. We were able to get a close above the 25,000 on the hourly charts here, but it was immediately given back up the very next candle, the very next hour, and we did see we started to close back below the 25,000. So 25,000 has proven itself to be resistance, likely a psychological level, and we weren't able to hold above that level. We could have said it was a bit of a double top here in around 25,030, but it's close to 25,050. Around 25,030, again, we've seen that sell side momentum come back into the market. So we've had prices come down. Test the 24,864, had a very weak move here. In terms of the bullishness, very slow and indecisive, as indicated by the wicks to the downside. A series of dojis indicated the market was likely waiting for some sort of catalyst to give it some direction, possibly further heading to the downside due to the fact that we found resistance. Most recent trend, we've posted a series of lower highs despite finding support in prices heading upwards. The move upwards has not been as decisive, and we have found resistance on a couple of occasions more recently. So after having the brief pullback from the support, again, we've seen that strong sell sides momentum take us back down towards slightly below this 24,800. We've traded as low as, let's just see, I think it's 8. So we traded as low as the 24,781. So slightly below the 24,800. Nothing to be too concerned about. We did see some bullish buy side momentum return to the market for us to head back above the 24,800. So it does appear to be forming support at the moment, but we do see that bearishness return slightly somewhat. So we'll see whether we do get a test of the 24,800. If we do hold the 24,800, we'll be looking to see how price direct was at 24,864, from which we did previously find support. A break and a hold of the 24,864, we're looking for a move back up towards that 25,000. And if we can hold the 25,000 for a period of time, we are looking for a price head up towards that 25,101. Eventually 25,243, and possibly depending on market volatility. And over the medium to long term, we're looking for price head up towards that 25,439. We do have to be aware, after moving beyond the 25,101, of the 25,160. In around the 25,160, we've previously found a swing in the market. We've previously found support over here to your left for a move upwards, and we found support 25,160 for a move upwards, and more recently we've head up towards that 25,160. We found some resistance before seeing this sell side momentum return to the market. So it is important to bear in mind the 25,160 level may prove itself important. Now, if we aren't able to hold support after testing the 24,800, we are looking for prices to head back down towards that 24,700. Previously, where we did find some minor support, a break from which we're looking for price head down towards that 24,650. While keeping in the back of our mind, the most recent low here is currently in around that 24,666. It's about 16 pips away from 24,650, so it's within a bit within that trading zone there. So it's within the trading zone of 24,650. It's within this range, I'd say, to see if we do see that bullish buy side momentum return to the market. If volatility and the bearishness persists, especially in light of the most recent trend, we are looking for prices to move beyond the 24,650 and head down towards the 24,550 and the 24,510, which I'd expect to be far in the range unless we do have a particularly volatile day here on Monday, the 19th of March. Now, those are pretty much the levels that we are looking at to the upside and the downside. What we'll do now is look at the high time frames. Now, the monthly time frame on the US 30 is it's kind of pointless, to be honest, but we'll have a look at it nonetheless. So, here on the monthly time frame on the US 30, we've had a very strong move to the upside, as we can see here from 2009. We've not had a meaningful pullback of any kind, really. We've had a few minor pullbacks here and there, around 2011 and in around 2015 or so. But the market has been a very strong uptrend. Now, the month of February was a very volatile month. We've had the market move over 2,000 points to the downside at its lows. Then during that month, we did see quite a bit of buy-side momentum after having the schism. We did see some buy-side, as indicated by the wick just there. We did see quite a bit of buy-side momentum return to the market. Now, the month of March, we've had a move up, and we've rejected. And somewhat, the month is still a bit bearish here in the month of March. And we've not seen the follow-through to any degree from the buy-side momentum that we did see coming near the end of Feb, after having the sell-off in the early to mid part of Feb. So we'll see whether we do have that downside continuation on the US 30. But it'll be somewhat counter-trend because the overall trend here on a monthly time frame is clearly to the upside. Now, let's just have a look at the weekly time frame before having a look at the daily and wrapping up here. Over on the weekly time frame, we can see here prices have been posting a series of higher lows. Now, this was in February, where we did have over 2 weeks. We did have quite a bit of volatility, where we did have a pretty sharp sell-off, from which we did see the bullish buy-side momentum return to the market. Now, we are in a bit of we do seem to be operating within a bit of a trading range here on the US 30. We are operating within the body. Okay, we broke the high of the candle, but we weren't able to close above it with any degree of decisiveness. And the high of the most recent candle here being in around that 25,500. Now, we've traded above it, but we weren't able to close above it for any great period of time. And instead, what we are seeing is further sell-side momentum. So we are operating within the body of the candle, I suppose. We're still operating with the body of the candle within the range of the candle. So we might see a bit of a range develop here before we either break out to the upside or the downside. But what we must also point out is indexes do have a bias to the long side, as can be clearly seen here, especially if you look at the higher time frames. There is a bias to the long side on indexes, especially over the medium to long term. So this move to the downside may be short term, may just be a correction in the overall trend to the upside. We could see prices correct all the way down towards that 23,000 mark. Down towards that 23,000 mark before seeing bullish buy-side momentum return to the market. But the most recent trend and how prices are developing, we had a bearish week last week, and we do seem to be having a bit of follow-through now here on Monday, the 19th of March. Now, the previous lows, which should come into focus going forward, we've got 24,321. If we do see the downside continuation, and 24,216. So those are levels again to the downside. where we've seen some buy side momentum return to the market. Now we'll have a look at the daily time frame, which should be a bit more interesting. So we have a look at the daily time frame, and here on the daily time frame, you can see the extent of the move to the downside. Very sharp sell-off, especially in light of this most recent trend. Very sharp sell-off to the downside. Now, the upside has seemed to have been capped. We've had a move downwards. We've seemed to have posted a lower high here. So we've had a high, especially where we've got a high, lower high, potentially lower high here, but we do appear to be having some descending support here. So if we were to put in, I'm not sure how well this will work. Wow, it is pretty sharp, isn't it? It is pretty sharp. It appears to be the line. So if we work with this trend line that I've just put on the charts, we do appear to be finding support, and again we've got that descending resistance there. So price is going to a bit of a squeeze at the moment, so the degree of indecisiveness could play itself out, could come to a conclusion of some kind. There does seem to be a slight bias to the downside here, while there does seem to be a slight bias to the downside in light of our sharp move to the downside, posting a lower high still, while we do have these wicks to the downside indicating there is a degree of bullishness underlying the market. The most recent trend here over let's just lock these drawings on the charts. Hold on a sec, just bear with me a second here. There we are. So most recent trend here, especially over the past couple of days or trading sessions, there does appear to be some sell side momentum. We did have that bullishness and that doji, but we weren't able to see the follow through so far here on Monday, and we are seeing that bearishness continue. Let's just remove the drawings from the charts, clear the charts up a bit here. So as we can see here, we are having a degree of bearishness over this most recent micro trend, and posting that lower high, possibly looking for prices to head down towards that 24.6. If we do see that, if we are unable to find the support levels previously mentioned, looking for prices down towards that 24.6, 24.2, and of course we've got these very important levels from which we did see that recovery after seeing that very sharp sell-off. So we'll see how price develop, but there does appear to be a slightly more bearish bias to the market, while bearing in mind over the medium to long term, there is, to an extent, a very clear bias to the upside. Now, let me just show you that on a weekly chart so we have an idea. So here I am on a weekly chart, and I've gone out all the way to 2009. From the 2009 lows where we previously had a pretty sizable sell-off, as we can see over time, over the years, pretty much the 9 years since 2009, we've had a very clear bias to the upside here on the US 30. So if you were, I say, buy and hold investor, you would be very happy. If you were shorting the market, depends where you shorted, you could have been punished if you weren't very agile. If you weren't very agile, you'd have been punished in this market that has had a clear bias to the upside, this index. But overall, we do seem poised for that downside without overemphasizing the point. And with that said, before I say it say it again, that should wrap up the US 30 analysis. Thanks for watching.